The breadth yesterday was okay. Let's see, are we in for a meaningful breadth? Yes, we are in for a meaningful breadth today. Adani group of stocks, nothing new has come out, but sentimentally you know that the debt problem is behind them. Bajaj Finserv, Maruti, Apollo Hospital, SBI Life, all of them are off to a good start. The breadth is looking much more powerful than what it has looked in a long time. Then you got, let's look at some individual movers yesterday. Reliance, oil marketing stocks, those were in demand yesterday. So Reliance is off to a flat start. Tata Communication of late has done rather well. Let's look at Tata Communication. Autos ahead of the credit policy. Rate sensitives could be important simply because of what markets expecting in terms of rate policy action. Zomato is the other one which you want to look at in terms of where the price action could move. And then Tech Mahindra, where a lot of yes and no has started, even though there is a change of guard there. Zomato 71.5 and Tech Mahindra at 1,095.
Yes, indeed. Those are some of the movers in today's trading session. But other than that, let's also map out some stocks that will be in the spotlight in today's trading session. You do have a Godrej Consumer with respect to the new CFO, that management rejig. This is effect August 10th, so that stock as well will be tracked on your screens as we speak. Other than that, as well, you've got Mrs. Vector. Do remember, we did hear out that commentary as well coming in. Strong Q4 is what it's been. There has been a 40% growth as well. The Adani group of stocks merit a mention as now the loans have been prepaid months after the Hindenburg saga. Close to $2.65 billion worth of loans that have been repaid. You've also got Delivery, the management and the analysts meet saying that they will be matching the prices of the peers. This is with respect to the Express as well as the PTL business. So we'll be closely watching out for that stock too. Eicher Motors, the management as well has spoken about double-digit growth, which is on track. JK Cement has acquired Toshale Cements for 157 crore rupees. A quick check-in on that stock. You've got MTAR Tech with the promoter entity selling about 3.6% stake in the company via a block deal. And Veranda Learning has partnered with Talent Academy to augment its reach in Kerala. So a look at that one. IEX, remember we said that the May overall volumes are up 8%. There's been a price fall of about 30%. So that stock too is under pressure. Let's find out what exactly our chartists are making of the start to trade this Tuesday morning, as well as the first trade that they're punching in. It's quiet at best. Kunal, your take on the first stock that you'd be looking at?
Well, that'll be IndusInd Bank. Very strong momentum for IndusInd Bank over the last 1 month, moving up from 1150 levels to 1300 plus mark. So that's a stock which I'll be getting interested on into the first trade.
Right, Naresh, what are the first trades that you're punching?
So adding on to Tata Power, the stock looks interesting at 218. The risk reward is looking at a stop loss at 212 and expecting a move to 240. So risk reward trade here on Tata Power.
Joins us. Let's connect with him and talk markets. Harsha, good morning. Thank you for joining us. The dream run continues, and Morgan Stanley is saying that this is just the beginning of the party. Do you think the summer rally of 2023 has a long, long way to go? It could be like what we saw, let's say, in 2021 and 2022, like it extended for a couple of quarters before it peaked out?
Good morning, Nikunj. Clearly, we remain positive on the market, although in terms of fundamentals, maybe it will take 1 or 2 quarters more to get the same kind of confidence for a sustained rally. Nevertheless, I think given the fact that fourth quarter results have been slightly ahead of expectations and also better than the previous 3 quarters, we believe that as commodity inflation moderates, numbers should start inching up even higher from these levels. And if that happens, then I think market has more legs to go up. However, in the immediate term, maybe it will consolidate a little bit more.
One is wondering, what should retail participants be doing right now? Adding more positions and trying to catch the rally further? Or you think it's now time to sort of sit back and consolidate on your holdings and maybe even profit take a bit?
I wouldn't suggest taking profits at this point of time, because while the markets have moved up a little in the last couple of months, the valuations are still in the fair range of valuations. So to that extent, there is no need to really book profits and look for other asset classes. However, if you are investing now, maybe you could make it a little more staggered and look for opportunities on the downside if there is any volatile opportunity, and if you are able to get it at slightly lower valuations, maybe that's a better. So to that extent, maybe a staggered approach with little ammunition on the sidelines is what one could use.
Right. So Harsha, enlist for us, what are the current sector overweights and underweights?
Aisha, we have been positive on the domestic businesses for quite some time now, continuing with that theme even now, because we believe that domestic growth is a lot more resilient than global growth. There are many sectors which have not been as strong as what it looks to be in terms of future at this point of time. For example, auto was one sector which was kind of not making the list for quite some time. Over the last couple of quarters, I think the sector has seen a lot of positivity. More subsegments have seen broad-based momentum coming in terms of demand. We also expect gross margins to improve as commodity inflation moderates. The new product launches by a couple of players have also evinced a lot of good interest. So overall, this sector seems to be one sector which can continue to outperform. And along with that, we are also seeing good order books for most of the auto ancillary companies. And they should also be the beneficiaries of commodity price deflation as you go forward. So overall, auto ancillaries is definitely one space where we've been positive and continue to have overweight at this point of time.
What is the outlook when it comes to new age technology companies, the likes of Policy Bazaar, Zomato, etc.? Do you think that in comparison to the rest of the market, they still look expensive?
Yes, we have been a bit selective there. The valuations continue to be on the higher side. And also there are other technical overhangs, such as possibility of some of the existing investors or the early investors trying to get out of the companies, etc. So to that extent, I think one has to be a little careful there. Although I think there has been a serious price correction. So to that extent, some of the expensiveness of the sector has come out. Nevertheless, there are better plays on the domestic side, which are traditional businesses, manufacturing businesses, which will get benefit of higher margins. And also, if demand continues to be as strong as what we are seeing today, then there is better earnings growth in that basket, which could lead to better re-rating as compared to some of the internet or the new age companies, I would say.
What about your outlook when it comes to the entire capital goods sector, given the kind of performance that we've seen with the fact that execution as well is picking up? Do you think that this is a sector that merits attention?
Definitely. This is one of the overweight sectors in our portfolio for quite some time now. However, the current valuations don't leave too much room for further re-rating from these levels. However, the order book continues to be very strong. The execution is also near perfect, I would say, in most cases. So if you're a long-term investor, you can still hold on to some of these names. But in the very near term, we think there is no further room for valuation re-rating in this basket.
Okay, fair enough. What about your outlook then, Harsha, when it comes to the entire earnings momentum? How have you, categorized the quarter gone by, and what's your outlook? Because, for instance, we were talking about the FMCG sector earlier this morning, and the annual reports do seem to indicate that there is that sense of a slowdown, a volatility, etc., which the managements have acknowledged.
In terms of the earnings season, fourth quarter Nifty earnings growth was about 16%, slightly ahead of expectations, and also better than the 12% growth that we have seen for first 3 quarters. So to that extent, yes, it's been a better quarter. However, we still have not seen a broad-based margin improvement across categories. That is likely to be seen only in the next couple of quarters. If you look at overall results, even today, it's being driven by auto and banking sectors. So unless we see more of the sectors participating, we don't think that there will be a broad-based and sustainable rally in the market, which could be maybe 1 or 2 quarters away. However, if you talk about FMCG in particular, I think clearly there has been a slowdown that has affected the sector. But as you look forward, there is some sign of bottoming out of rural consumption. And if monsoon doesn't play a spoil sport, then probably we will see a reasonable uptick in rural demand, and that should also coincide with gross margin improvement. So overall, I think this could be a dark horse sector as you look forward for the next couple of quarters, wherein both demand and margin should improve, and hence we could see some outperformance coming from these sectors also.
How critical is the RBI policy this week? And does it seem like it's a given that it's going to be a pause yet again?
It looks like more or less, I think it's given that it's going to be a pause. We are at a comfortable positive real rate today with inflation below 5% and repo rate at 6.5%. So to that extent, I think this is a comfortable situation for the central bank to actually pause at this point of time. We do expect a pause this time around.
Okay. There has been a lot of focus as well on the entire defense space as a whole just recently with the US Defense Secretary visit to really strengthen the bilateral defense cooperation between the US and India. And there's been a lot of steps that have been taken, even if we wind the clock back with the Make in India and the indigenization efforts. Do you believe that there is more room for growth when it comes to the defense sector, which has already been in a heady bull run?
Definitely. The runway for growth is really, really long for defense stocks, I would say. There is a higher scope for indigenization, which will improve margins. There is an export opportunity. And also the order book continues to be very, very strong, given that government is continuing to spend on the defense capabilities. So overall, this sector will definitely look at a higher level of average growth rates as compared to what we have seen in the last 5 years or 10 years. So as a sector, definitely this is something that will see a re-rating. Part of that re-rating has already happened, I would say. We have also seen some thematic funds coming into the mutual fund industry, looking at defense in particular. So if you see more money coming into some of these thematic funds or more launches seen in this category, that could also lead to a lot more re-rating because there are not too many listed names at this point of time which are into defense. So overall, the long-term growth looks really, really strong, and there is room for further re-rating from these levels as well.
Okay, room for further re-rating when it comes to defense. But the IT sector, given the kind of results that we have seen, the valuations that they command, what's your outlook?
IT, I think the valuation risk is limited, given that it has also kind of consolidated over the last 5 or 6 quarters, especially the large cap IT. However, there is still a question mark on the business momentum. So to that extent, as I said initially, the domestic facing businesses could probably do better than some of the global facing sectors, including IT. So that's where, while we have some weight in IT sector, we continue to favor some of the domestic businesses in the portfolio.
Are you penciling in steady earnings growth when it comes to the pharma sector?
Pharma has been a difficult sector. There is no single driver that's driving the sector. We have seen a lot of institutional funds shunning the sector. There is clearly an under ownership. If at all there is a single thread that's there for the entire sector, I would say that's the under ownership of the stocks. But unfortunately, there is no single driver that can really lead to positivity in the sector. The valuations are also fine. So to that extent, it can be a good defensive sector, and we'll have to watch out for any positive triggers as we go ahead.
Harsha, the other thing, of course, is, the big thrust on manufacturing. Wanted to understand how you at the brokerage are recommending, taking the best advantage of this theme, which is currently at play. And you are seeing most sectors buoyant here as well.
Aisha, we are not a brokerage, we are an asset management company.
That's right. Sorry, stand corrected.
We do have positive opinion on the manufacturing team. We do have a thematic fund which was launched about a year back, which has done pretty well. And we also believe that as a thematic category, manufacturing can definitely give better rewards even in the next few years as the entire policy landscape is changing. And that's really positive for Indian manufacturers. We are also seeing India emerging as one of the reasonable competitors in the overall manufacturing space in the globe. So given all this, we do believe that there is definitely long-term potential for the manufacturing sector in the country. And that's the reason why we have positions in diversified funds as well. We have also launched a thematic fund last year, which is just focusing on the manufacturing segment. And that's something that we believe is good for investors as well.
Okay. Just want to mark some of the movers in trade. You've got the likes of an Ambuja Cement, which is scaling up. Ultratech is well looking comfortable. The entire cluster, of course, of Adani Group stocks continues to be in the limelight on the upside with respect to the recent loan payment announcement. Maruti Suzuki is in the green and currently quoting at about 96.93. Axis Bank, Kotak Bank, so clear support coming in from some of those heavyweight marquee financials. IndusInd Bank as well added to that list. What's the outlook, Harsha, when it comes to the entire real estate space? Just curious to get in your take, given the fact that we have also seen foreign institutional inflows, which have surged quite significantly in India. What's the outlook on the real estate basket as a whole?
On the real estate, we continue to remain positive, although our bets are very selective in the sector. However, we are playing the real estate uptick with ancillary industries, including on the home improvement segment, as well as cement in our portfolios. Real estate clearly has come out of the bear run for almost, that lasted for almost 10, 15 years. I think inventory levels across top 8 or 10 cities is at a very minimum level. RERA has also cleaned up the industry. The customers are happy in terms of what's happening in the real estate sector. The affordability has really gone up, while interest rates may have gone up in the immediate near term. However, if you look at a longer term EMI payments, that has not really made much of a difference unless the borrower has taken a new loan during the COVID period. And we believe that percentage is very small as compared to the overall home loan borrowing book. So overall, I think given all these positives, we continue to believe that the sector is likely to see better days even going ahead. And accordingly, we do have positions in our portfolio.
Great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you,
That's the opinion on market and sectors from Harsha Upadhyay, CIO Equity at Kotak AMC. Let's revisit then what the market is currently up to. We are consolidating largely today, and that's pretty much what we've been doing, and we did that yesterday as well. But today is a much quieter session, at least from the open up until now. You've not really seen any jagged edges. Ignore that. That's a very narrow band that we've traded in so far. Just about a 12-point downtick is what you're seeing. Sub the 18,700 print for the Nifty futures. Your big movers today are cement. So look at a JK Cement that's holding up 3.5%. Ambuja is up 2.7%. Ultratech Cement is holding up 1.6%. So it's really the cement pack which is a buzz, and there's ACC as well, which is up 1.5% as we speak. Outside of the cement list, there's PFC, which is holding out very smartly, holding up a good 1.5% as we speak right now. And it's midcap IT, which is looking like the weakest link, at least from within the liquid universe. So Persistent, Mphasis, TechM, Birlasoft, all these stocks are under pressure, down anywhere between about 2 to 3.5% apiece. But real estate and banks, here's what Chris Wood has to say about whether or not he believes there's opportunity in these sectors right now.
There is a consensus view on owning banks, but I'm going to still own the banks. I've been running my Asia ex Japan long only greed and fear portfolio since 2002. So I would say in the more than 20 years that portfolio has existed, if there's one sector where there's always been an allocation in an Asian context, let alone an Indian context, is Indian private sector banks. So to me, that story remains intact. That's the most straightforward story in India. So if there's a global investor who wants to invest in India and hasn't got the bandwidth to invest in lots of stocks, that's probably where they're going to invest. But right now, with the monetary tightening cycle over, the obvious place to add to, at least I think it's over, the obvious place to add to exposure is property stocks. So the property stocks went vertical in 2022.
22, yes.
When we got second half of 22, they went vertical because suddenly the market realized the property upturn was finally happening after a 7-year downturn. Last year, they corrected because we're in a monetary tightening cycle, but actually the property market kept the actual physical property market kept recovering. So the moment we get hint of easing, the property market stocks will do very well.
So can I say
the property stocks will do well.
Yeah, so can I say that Chris Wood is in fact urging our viewers that don't buy real estate, but buy real estate stocks in India?
Well, right now that's the safer trade, but I think they'll both be going up. The other point about real estate is because you had this dramatic, when I say dramatic in its impact, Real Estate Regulation Act, which has caused this dramatic consolidation amongst developers, which means there's a fundamental lack of supply because it's much harder to develop property now from a developer standpoint, because you've got to have the balance sheet to keep 70% of the pre-sale cash flow in escrow, which means that the supply is going to be lagging the demand. So I think it's a very straightforward story.
So Chris, your portfolio is in public domain. So I'm going to just read off the names what Chris Wood's model portfolio currently has. It has Godrej Properties, real estate company, DLF, India's biggest real estate company, Macro Developer, India's biggest residential real estate company, and I think there is Century Textiles there, which is also real estate play.
Real estate related play.
Yeah. So you pretty much like 4 real estate stocks, even though the weightage of real estate in the Nifty is very low. You are not overweight, but you are double overweight on real estate.
Yeah, but in my Asian portfolio, I added to the real estate stocks last week.
So when you tell your clients about buying into real estate stocks, do you get a pushback, or are they open to the idea?
No, I think the domestic institutions here have always had a prejudice against property business, property stocks, because they don't think it's a long-term business. But actually that's a bit strange, because people buy property stocks in the UK market, the US market, the Chinese market. So it's really a question of where you believe we are in the cycle. But it may have been, some of these prejudices against the property companies may have been valid in the past, but this time around, given the very dramatic intervention of RERA, you can only be developing in India as a listed company if you've got a strong balance sheet. So you have a dramatic consolidation, which should be to the benefit of the survivors. No, I never have IT, but it's not really my area. But no, there's nothing wrong with the IT company. There's an interesting conceptual argument, which I don't know the answer to, which is how will the IT sector cope with AI? I've got, my base case is I'll be able to manage it, but I've got no inside track on that. Personally, right short term, I would favor staple consumers over discretionary consumers, but this is just tactical.
Have you used ChatGPT to write your greed and fear index?
I will never use ChatGPT, but I've never used Facebook. It doesn't stop Facebook going up a lot. So so ChatGPT is kind of irritating, actually, because I was hoping this was, I'm always biased in favor of Asia and emerging markets. So Asia emerging markets were set up to outperform this year if China had come back normally. But this AI story, as soon as ChatGPT happened, is created a narrative for the US tech sector which didn't exist.
You know, the food placed on the table, guess what, has been ordered on Zomato. Yeah. And Zomato is part of your portfolio. I'm wondering why
I've just added Zomato because I've been under pressure to put that in my portfolio since the IPO, but obviously I didn't. But I think now it's in the long run, this is a very straightforward play on Indian consumption, and the total market cap is very small relative to the potential addressable market. And based on what I've been told, only 6% of the Indian population apparently currently pay for things digitally.
So, Chris, there are a couple of last follow-up questions, and I promise I'll not extend our appointment beyond that. Last 12 to 18 months, we've been in a cycle of interest rate hike globally and locally, and typically when that happens, hard assets do well. Growth stocks, they underperform. Now perhaps we could be in reverse of that. So do you think globally growth stocks could make a comeback? Guess what? I mean, you've got NVIDIA, which has already become $1 trillion company.
No, but NVIDIA is different, you see. So I put NVIDIA in my global portfolio when I realized this GB chat story, because in this, we don't know which form of AI will really take off. So what you want to try and own is the picks and shovels of AI. And apparently it seems to be the case that people need NVIDIA's GPUs to do AI, so that explains why. And basically, the tech sector, as I was saying, now has a new story, because first quarter people were buying all the semiconductor stocks before. on the argument that the demand's recovering, but actually all the demand estimates for PCs, smartphones, and regular servers are still going down. So this whole GB chat has just created a new narrative, and you have a spectre of unlimited growth. So that gives a story back to the tech sector.
You know, it's May 2023, but hypothetically, if I take the clock forward to May 2028, and we are having the same chart ordered on the Zomato, and I still have the Greed and Fear newsletter in my hand, what do you think potentially 5 years from now we could be discussing?
5 years from now, we'll be discussing, we might be concerned that the banks and property cycle is peaking.
Okay.
But then the other key issue was whether all this promise of made in India has actually become a reality. Because the reduction will either be moved to India or it won't have been. At the moment, you know, this is very early days, but there's promising signs. And then the other question is just this whole, tax revenues growing as a percentage of GDP and the whole economy becoming more formalized. Has there been more progress on that front?
All right, now let's talk markets. Nidan Gill joins us now, President and Business Head Abrasives for Carborundum Universal. Nidan, good morning. Thank you for joining us. Despite the war, the Russian subsidy operations were not impacted, but you are unable to transfer cash. So how much cash is underlying with the Russian unit, and how do you plan to bring this to India?
Yeah, see, I think I would be speaking more on the abrasives business. This is something that connects, our electrominerals business. So I would not be in the right position to speak about this. I'm here to speak more about the abrasives business and share my views around that.
Would you broadly tell us what's happening in the abrasive business?
I think the year seems to have begun well for us. We are seeing good demand coming in from all the segments, largely driven by automotive segment we are seeing right now. Demand in the passenger side is followed by CV, two-wheeler by the EV electric vehicles over there too. But the other segments of the market, like the infra spend from the government or some of the demand related to housing, we are seeing good momentum in the first couple of months of the year.
Okay. Ninad, the other thing that I wanted to also talk about is specifically when it comes to your abrasive segment. Have you been able to take price hikes, or do you think you'll be able to do so in the times to come?
Yes, so I think through last year, we were able to drive prices, especially in Q1 and Q2 of last year when we saw huge commodity side inflation. And we have been able to largely get back to our margins of Q4 of financial year 2022. So I think going forward also, we see that there would be an opportunity to take some price hikes through the year, although it will definitely be lesser than what we were able to take last year. But we don't really see margins to be driven by prices as a key lever for this year. But if there are any commodity side inflations or cost increases that we see, we know that we will be able to take those price increases in the market.
Okay. Just walk us through, in the China recovery that we've seen, because when it comes to minerals, the Chinese competition is fairly high. And given that recovery in China has been lower than expected, it is opening up. So just wanted to understand from you, what kind of an impact does this have on demand?
So, for us, we, of course, see a lot of grains being imported into the country again. Post China recovery, we also see a lot of abrasives coming into the market post, in the last couple of months. We know that this obviously has some impact on the pricing for our electrominerals business. And also, it puts pricing pressure on the abrasives business. But the way we manage it is by playing within our portfolio, moving into some of the tier 2 or tier 1 spaces, and increasing our focus in those spaces. For electrominerals though, the demand from the refractory side continues to be very robust, and therefore the demand from local refractory manufacturers is still continues to be very high, and therefore they are able to play out the grains that are coming in from China and mitigate that impact. For abrasives, it's like I said, it's more a portfolio management game, and we have to in times like this we try and improve our focus on the tier 2 and tier 1 spaces where we do not see that much of an impact from China or Chinese imports.
Sure. The other thing, Ninad, that I wanted to talk about was also your ceramic segment. On a 3-year basis, you were looking to grow at about 20% CAGR. But for FY24, you are expecting some moderation. Are we right about that? And is there really, demand environment globally which is appearing weak?
Again, ma'am, I'm sorry. I'm here to speak more about the abrasives business over here today. But yes, on ceramics, as of now, we are not really seeing any softening as such. Both on the engineered ceramics as well as the wear ceramics, we see a pretty healthy demand in the next couple of months.
Revisit that with the abrasive segment, just looking at the kind of performance check. I know you highlighted it in your first answer, but the standalone growth there has been a little bit flat. What is the outlook in terms of passing on cost to consumers, and what are the projections as well that you have for the abrasives business for FY24 as a whole? What will be some of the key drivers?
Yeah, I think, like I said, we clearly see margins already coming back to the quarter 4 or 21-22 levels, and the year has begun well. We are seeing a good upside on automotive. We continue to see a good upside on the infrastructure segment. Some of the other segments like fabrication, general engineering, foundry and forging, also we continue to see good demand in the next couple of months. So we see a good double-digit growth coming for our abrasives business this year. We definitely feel this from a growth perspective. It will be a much stronger year than 22-23.
Great to have you on the show today. Thank you so much for accommodating this interview request.
Sure. Thank you. It's my pleasure.
Okay, let's move on. Let's just revisit what the market is very quickly up to and whether or not we've seen any move up. We are attempting definitely a bit of a scale up, trying to move ahead above water and trying to get to that 18,700 print on the Nifty futures. Let's see which way this actually heads. We'll take a very quick break, come right back, lots more lined up on the other side.
Thanks for staying on with us. Still tuned into First Trades. Just a quick check-in on the markets right now, and at 18,600, just perched exactly at that level. In fact, within the Nifty 500, as the markets are doing absolutely precious little, let's check in on some of the movers. You've got an Aegis Logistics, which is active, Heidelberg to a certain extent, Bharat Dynamics, and something like an Aster DM. That too is a buzz in trade. But let's put the spotlight then on Kei Industries, talk a little bit more about the copper prices which have dropped as demand has weakened. Is that aiding volumes? Let's understand then from Mr. Anil Gupta, Chairman Managing Director at Kei Industries. Thank you so much for taking time out. Let's begin by discussing volumes, because in the previous quarter, your volume growth had moderated due to the channel destocking, largely owing to the fall in copper prices. What is the trend looking at right now? Has the trend reversed? Have volumes picked up as the copper prices have continued to fall in Q1?
Good morning. Regarding volumes, definitely there is some impact in April and May because of the drop in copper prices. And the dealers are buying only as much as they are able to sell. So they're definitely, they are not stocking the goods. But as the copper price little stabilizes, I think the stocking will start, because dealers' counters or shops are almost empty now, and to meet the demand or to the customer, they have to buy. So we are seeing a better traction from end of May and now also.
So Anil, with the volatility in prices still continuing, what is the volume value growth that you're likely to see in FY24?
Our estimation is around 15 to 17% volume growth in FY24. And so far as value term is concerned, that will depend on how the commodity prices moves. But definitely we will be having 15 to 17% more volume compared to FY23.
Okay, so you're looking at 15 to 17% more volume growth. So in light of that, then can we extrapolate that to your overall revenue growth as well, talking about, that 16 to 17% range in FY24? Is that on track?
Yes. But I'm saying that it is for overall financial year. I mean, quarter on quarter, there may be some variation, but some quarter may be weak, but other quarters will be heavy because we have very good order booking and a good traction of demand from the market.
But as we understand, Anil, that's actually lower than what you guided for in FY23 as well as 22. Why is that? Isn't demand environment improving?
No, I'm not guiding lower, but definitely demand position is improving in among all sectors, and I hope that even retail will also improve. It is only because of the little bit of fear in the minds of dealers that the copper prices may drop, so they are not stocking. That is the only reason. But cable demand is robust from industry and the infrastructure sector.
Okay, fair enough. What about the outlook when it comes to, your margin? Because you've guided for 10.5 to 11% margins, which is similar to what you've been doing for the past many years. But don't you think that the fall in copper prices will benefit your margins and you are likely to see that raw material price pressure coming down? And when will we see your margins pick up from these current levels of 10.5 to 11%?
We definitely expect the margins to hover near 11%. I'm not giving better guidance because so far as copper prices drop is concerned or metal prices drop is concerned, our strategy is to pass on the reduction in the prices to the customers whenever they go down, and whenever it is going up, we are definitely passing on the increased burden also as well. So we are very well, matching our sales order with our inventory so that we don't have any loss on the inventory. This has been done in last 10 years very meticulously by us.
Okay, fair. That's the outlook coming in on margins. Now, post the receipt of the necessary approval in the US, are you seeing export traction from the US? What is your domestic versus export mix likely to be?
Our export is likely to be 12% of our total sales in this financial year. So that means there will be a substantial jump from last year. Close to 35 to 40% jump may be there. We have already started exports to United States and expecting a very good volume in this financial year. Overall exports could be in the range of 800 to 900 crore rupees as per or even more compared to as estimated by us at the moment. We have a very good order book at the moment from domestic as well as export markets.
Status on your capex, which you had outlined for the 800 crore rupee greenfield project, and by when can we see incremental revenue flowing in, and will the funding then be via internal accruals or debt?
We have lined up a capex of around 1,000 crore in these 3 financial years. It will be around 100 crores in the brownfield capex at our existing plants, which will be giving us continuously increased revenues starting from third quarter of this year. And we have acquired a land near Ahmedabad, and there we are going to start the construction work by end of June. And that project will take around 18 to 19 months to come out with the first phase of production. That means fourth quarter of FY25. And so by that time, the revenues will start coming up from there. So far as, CapEx funding from is there, it will be done completely from our internal accruals and without any debt.
What about your order book? What is the current order book standing at? And can you walk us through the FY24 guidance?
Current order book is approximately 37 or 3800 crore rupees, and it is moving up. We normally are receiving 7 to 800 crore rupees order a month, and they are also executed simultaneously. In retail, there is no order book, so the orders comes and they are executed. So we don't count them in the order book at all.
Right. Okay, Mr. Gupta, great to have you on the show today. Thank you so much for taking the time out and speaking with us today on ET Now.
Thank you very much for inviting me today to your show. Thank you.
Okay, that's the word coming in from the chairman and MD at Kei Industries. Quickly take stock of what the market is up to. Still pretty flat. 18,672 is where we're currently at. Cement and in bits and starts, some of the realty plays are the ones which are holding out very, very smartly as we speak. But the US Secretary of Defense, Lloyd Austin, is in India on a 2-day visit, and a crucial Indo-US bilateral meet as well took place. And on agenda was the discussion on free and open Indo-Pacific ties with an eye on China. India also, remember, plans to procure 30 armed drones worth about $30 billion as well. Austin's visit comes 2 weeks before Prime Minister Modi's visit to Washington. And after the meeting, Rajnath Singh said via a tweet that the partnership between the two nations is critical for ensuring a free, open and rules-bound Indo-Pacific region.
And our deepening bonds show how technological innovation and growing military cooperation between two great powers can be a force for global good. And so on this visit, I'm pleased that we have taken new steps to strengthen our defense partnership. We established an ambitious new roadmap for defense industrial cooperation, which will fast-track high-priority co-development and co-production projects and build closer ties between our defense industries. We look forward to advancing some of those projects during the upcoming visit between our leaders later this month. We also discuss an important new initiative, Indices, that aims to jumpstart partnerships between the U.S. and Indian defense innovation sectors. And we're looking forward to the formal launch of Indices in conjunction with Prime Minister Modi's state visit to Washington.
All right, let's get a move on then and connect with Khadija Mantri, AVP Research at Sharekhan, to talk a little bit more about the Make in India boost for defense between India and the US. Thanks so much for taking time out and joining in. Wanted to get in an outlook from you first up as to how you're looking at the latest talks between the US Defense Secretary and India to help strengthen the ties, because clearly a lot has been spoken about with respect to strategic partnerships and avenues for collaboration.
See, we believe that it is the move in the right direction. India has been aggressive in the defense space in the last 2 to 3 years with a focus on indigenization, technology transfer and technology absorption from countries like US and Germany. So advancement of these talks would definitely help India boost its exports also. So yes, this is, as far as the exports or the technological capabilities are concerned, India has just scratched the surface as of now. There's a lot more to do. But yes, with positive, signs coming from the talks between US General Secretary and Defense Minister, these are the right steps that that India is taking towards meeting its indigenization and export goals.
Right. So, Khadija, needless to say that what we're looking at right now is just scratching the surface, and this is a long-term story when it comes to investment, the defense sector.
Yes, yes, it's a long-term story because right now they would just be establishing a roadmap. So now after that, we would know what type of technology will be transferred and how long will it take, because all these transfer of technologies for high-end aircraft or for military hardware or a lot of other complicated products, it takes a lot of time. So we need to know how and when it is going to be done exactly.
Right. Khadija, I was just looking at the kind of, multiples and the historical averages that some of these defense stocks are sitting at. And while, of course, they're above the historical average right now in terms of valuation, the gap doesn't seem to be as wide for most of these names. Wanted to understand where within the entire sector, and there are quite a few stocks there from Mazagon Dock, Cochin Shipyard, Garden Reach, HAL, BEL, Bharat Dynamics, etc. Where within this entire cluster do you still see scope for valuation uptake?
See, as far as our view is concerned, we are still positive on companies like Hindustan Aeronautics and Bharat Electronics, purely on the basis of their order book and the strong order visibility that they have for about 3 to 4 years. And in the conference call of the companies, the earnings call, they have stated that the order pipeline is also quite impressive for the next 1 to 2 years. So the revenue is secured. They have a margin in the range of 22 to 24%. Plus, most of these companies have strong cash balance, advances from customers, so that the other income component also would always keep the net profit at a very good levels. So we believe even if the valuation may be at peak, because the thing is that defense stocks have never have had such a high order books also. So based on that, if you see, given the earnings visibility, there is still an upside for stocks like HEL, BEL, and even say for small stocks like Paras Defense. Mazagon Dock also looks good, but then maybe it can be accumulated on dips.
Some of your top recommendations, but what do you think could be the spanner in the works? Because it clearly seems like a lot of things are boding well. You were talking about order book traction picking up, a lot of these talks with the US, the indigenization efforts by the government back home as well. What do you think could be some of the big concerns or some of the red flags when it comes to the entire defense sector?
So one thing that has been the concern for the defense sector always is the lumpiness in the order book. So sometimes the companies would have big orders coming in, and then there would be a lull of 2 to 3 quarters. So that time maybe the numbers would not look so good, and then the multiples can contract. So one thing is that, and then we are trying to get our foothold in the exports market since quite a long time. It's been at least 3 to 5 years wherein India has been aggressively pursuing, but then nothing fruitful has come so far. Even though our exports have grown by about 20-25% year on year in FY23, but still it is a small base it has grown on a smaller base. And if you see other countries, they have much large exports coming from the defense sector. So maybe the kind of delay in increasing our exports in the defense could be a concern, because then the thing is the defense manufacturers are completely dependent upon the orders from the Indian defense space. So that is like a concentrated order book for them. But if they get this diversification in exports, then it could bring a lot of growth avenues for most of our defense stocks.
All right, thanks very much for joining in and sharing with us your outlook on the entire defense space, Khadija. HAL, by the way, is a buzz in today's trading session. Just pull up some of the other defense stocks. Just let's quickly check in as to how some of them are trending in today's trade. And the likes of Cochin Ship, Mazagon, Bharat Dynamics, BEL, all of them merit a mention. All right, let's shift gears then and put the spotlight on real estate. Are we expecting recovery to continue to remain robust? What is the outlook when it comes to Mumbai property registrations? We've got Boman Rustam Irani, Chairman Managing Director at Keystone Realtors, now joining us on the show. Boman, thanks so much for taking time out. What's the outlook then when it comes to property registrations in Mumbai? Because data indicates there's been a 7% month-on-month dip. Do you think that this is expected to moderate, and what kind of overall industry growth are you expecting? Boman, if you could just unmute yourself so we can hear you.
Thank you very much for having me on your show. Look, the total number of registrations that have taken place in the year, about 118,000 in the year 22-23. And of that, about 12,400 registrations took place in just the month of March 2023. Mumbai continues to be a strong market, and growth out here is seen quarter on quarter. If you check the results of the kind of registrations that are taking place, and also the RERA data that we are seeing nowadays, you will see the kind of projects that are getting launched are in the various asset classes. And aspirational, or rather, I would like to say mid-mass to aspirational, which is the 1 crore to 7 crore segment, continues to be driving the sales growth in Mumbai city and also the MMR area.
Pawan, but given that Mumbai is getting a bit of a facelift, actually not a bit, a complete overhaul, I should say, with the metro lines, the coastal roads, I wanted to understand whether there are any new pockets which are seeing some, demand built up within Mumbai or even the outskirts that are emerging now.
You're so right. Mumbai is spending about 3 lakh crores as of today in the infrastructure uplift, everything from the metros, going all the way to the coastal road, in the way the city will be working and connecting with one part to the other. We are seeing a lot of new areas opening up. One of the areas that I am pretty keen on is the Mahim Matunga belt, because that is very well placed in terms of its location. At the same point of time, the metro now serves it. It always had a very good Western Railway line serving it. And going further towards Worli, you have the Worli link coming up to the MTHL, which will allow people from the south of the city as well as from areas like Bandra and Mahim reach what is the new airport that will be in under 40-45 minutes. And this is really going to be a huge change as far as we are concerned. We're also seeing a lot of interest in the Virar area now that the Virar-Alibag multimodal corridor is definitely looking a reality. The Thana Creek Bridge is also going to lead. Thana, which has been a growing market, will continue to be a strong market in the future. Given all this infrastructure push, we see a lot more interest today. And this is something that I'd like to just state on your channel. We see a lot of interest today coming in from the rest of Maharashtra, also for people to acquire a home in Mumbai. And not only that, we've seen a lot of good buying taking place from the south, I would say mainly Chennai, Karnataka, as well as from the north, mostly from the Delhi NCR area. We're seeing people come over here and make acquisitions for homes.
So, Baman, these areas that you talked about, is there enough supply in these areas, or are you seeing a significant price uptick already?
Okay, so good question. While the supply continues to be there, this is more or less the traditional supply that used to take place with smaller developments where there were not enough amenities being created to the building. But now with Rustamji in those areas, we're creating a lifestyle development where all the amenities that we've created in the rest of our projects are going to be, is going to be features that we will provide in those buildings out there. We are seeing a strong demand. We haven't launched the project as yet for sale, but we are seeing a strong demand in what our discussions with the brokers of the area are, and we are looking forward to a lot of interest the moment we launch that project, which is sometime later this year.
Okay, and I just, out of curiosity, and I'm sure a lot of our viewers as well would like your take, because of late, I think there's an increasing trend in Mumbai where people are preferring to rent homes versus actually buying them. Is this something that you're spotting? And if you could just give us your take?
The kind of demand growth is leading to a lot of redevelopment taking place. And when this redevelopment starts taking place, you see a lot of the existing members looking for homes. It's been our general, data point that about 65 to 70% of the people look at rental homes when the redevelopment goes on, whereas about 25, 30% or thereabouts usually have a second home in which they move into during the redevelopment process. So some bit of this rental market going up is also due to the strong developments that are going on in the city. At the same point of time, we are hoping that job growth continues and the commercial demand is continuously, or the commercial supply is continuously grown, so that there is a lot more of absorption of commercials, leading to a lot more businesses growing their base in Mumbai.
Okay. And a K-shaped recovery as well is expected when it comes to consumption trends, Burman. Is that something that's impacting maybe project mix decisions? Will you be looking to launch more high-ticket projects?
So fortunately for us at Rustomjee, we've always been across the entire spectrum of development. We are everything from affordable housing, where we give homes in Virar at about 40 to 50 lakhs, going all the way to the uber or super premium, where we're giving homes for as high as 70 crores as well. We see a very strong demand. Yes, you're right, in the premium and super premium category, but this, we should understand, was a category that was not supplied to extremely well in the past. And with the growth of good developments taking place out here, there's some very active interest for people to go ahead and invest in these homes. And they're looking at this, it's not surprising, but they're looking at this across various geographies. That is to say, everything from Borivali, which has a market for the aspirational class, which is 3 to 7 crores, is also seeing a lot of active interest for some very high and premium developments, which are selling as much as 12 to 15 crores as well.
Right. Okay. Always good chatting with you, Burman, and getting in the trends, at least in the Mumbai real estate market and what's happening here. Good having you on the show.
Thank you very much.
Okay, that's the word coming in from Keystone Realtors, Burman Irani. Let's move on and let's talk about that news that you just currently saw on your screens. The fact that the monthly and quarterly expiry day has now been changed to Friday for the Nifty Bank, the NSE circular states. So let me chat a little bit more about that. And we've got Rajesh Baheti joining in right now from ANMI. Rajesh, hi. Good morning. Good to have you on the show. Help us understand how life changes with the expiry now being pushed to Friday as opposed to Thursday.
Well, we all know that expiry day volumes in any segment or in any category of options is usually much, much higher than it is on other days. So when the Fin Nifty was initially introduced as a Thursday expiry, it didn't get any traction. And after they moved it to Tuesday, because you opened up a new expiry day, having Nifty and Bank Nifty both expiring on Thursdays, it attracted a lot of volume. What has happened in recent times is that Bank Nifty volumes have surged, and so have the Bank Nifty option volumes. I think these have come at the cost of Nifty volumes and Nifty option volumes to a certain extent. So one of the thinking could be that you move this expiry to Friday. Therefore, on Thursday, you'll have only the Nifty futures and options expiry, and therefore you would also get traction in this option segment, and on Fridays the Bank Nifty can trade. But it's very interesting because very, very recently the BSE relaunched its Sensex futures and options with a Friday expiry. So one can wonder also if this is a move to kind of attack the competition.
Okay. So basically what you're saying is that previously it was the Nifty Bank and Nifty eating into each other's volumes and to try and keep them separate, the division between Thursday and Friday, right?
Absolutely.
Right. But Rajesh, at the exchange end, would there be any adjustment which would have to be made by any chance?
Not particularly at the exchange end, but a lot of people who are running algorithms, and each day has its own little difference in terms of how your algos are placed. I think the backtesting would become a little difficult because all your backtest up to date will be based on a Thursday expiry. And Friday being just before the weekend, you got 2 days worth of beta. But if you're expiring a contract on Friday, then essentially most likely you will be squared up on Friday with no exposure left for Monday. So the backtesting on algos would become a little difficult because of this change. But otherwise, from the exchange and no change from algorithms, yes, you'll have to rework some of your strategies.
And this is the monthly expiry we are talking about, right, Rajesh? Or the weekly expiry as well?
I haven't seen this, but if I would think that if the monthly is changing, so will the weekly, because usually it is expiring on the same day. So it would be very strange if the weekly stayed on Thursday and the monthly only moved to Friday.
Okay. So as we understand, the weekly expiry will now be on Friday, effective July 7th, and the first Friday expiry will be on July 14th, and this is for the Nifty Bank. But Rajesh Baheti, always good chatting with you and gave us some clarity on why this move possibly. Good to have you on ET now, as always. We'll take a very quick break on that note. Still pretty flat. Cement continues to be the only solid sector as of now. Maruti, though, building on to gains from yesterday. Eicher, Kotak, Hero MotoCorp, Asian Paints as well are seeing some sporadic moves. We'll take a very quick break, come right back. Lots more lined up on the other side.